This video is about one of the most important indexes and indicators when it comes to investment in real estate, which is ROI and ROE. Let's try to understand what does of each of that indicator mean and what is the main difference between them. Hi to everybody, my name is Gary, real estate broker, real estate investor and investment advisor, and let's start. Let's start from the very beginning. The main idea of all the investors, moreover overseas investors, when it comes to buy property market, this is money. When we say money, we mean profit. So how do you understand is the project profitable or not, or how profitable the project will be? That is why there are a particular list of indicators that usually investors use or must use, and one of them are ROI and ROE. So this video is for you, my dear investor, to understand if you have the investment portfolio by this moment, to make the calculation and understand if the projects that you already jumped in are profitable or not really. I have no doubt that there are a list of investors who know these definitions even without Gary, but let's not forget about the thing that this channel is for everybody, starting from absolutely beginner one up to the very good experienced investor. So that's why let's start from the first indicator, which is ROI, returns of investment. What does it mean? Let's try to use the easiest vocabulary possible for everybody, regardless of the occupation, to get the main idea. Returns of the investment means what is your profit in comparison with the total price of the property. And here, let's give the examples with the numbers. Let's say we have a property, let's say apartment in Dubai, and the price is $500,000 American, 500,000. And we rent it out. If the strategy is the long-term rent, the investor rents it out, let's say for $25,000 annually. It means that your ROI, returns of the investment, is $25,000. You divide by $500,000, which is the total price of the property, and multiply by 100% to get your profit in a percentage. Making the easy calculation is gonna be 5%. When we say 5% in this particular example, this is the growth ROI. Let's not forget that there are some expenses that each of the investor must do, and one of them is, for example, service charge. That is why the difference between returns of the investment, gross ROI and net ROI, is gross ROI in this case is 5%. We just divide the profit to the whole price of the property. And the other hand, the net ROI is the same but minus all the expenses. So for example, in this case, 25k we divide by a 500k, multiply by 100%, we got it 5%, and then we minus DLD, which is Dubai Land Department registration fee, the same service charge, admin fee, and something like this. So if we make the simple calculation in the case of net ROI, we need just to understand that $25,000, which is the annual revenue, we should also minus the service charge, which you should pay annually. By the way, when we talk about the expenses, let's not forget that there are two types of expenses. The permanent one that you should pay as a service charge, like year by year, and something like we pay one time, which is, for example, Dubai Land Department registration fee, which is 4%, and so-called admin fee. Usually, investors use ROI indicator whenever you have the property on the secondary market, because by purchasing the property you pay usually 100% of the amount upfront. So that is why you need to understand how profitable the project is and how many years you need in order to get the money back to your pocket. Now presently in Dubai 2025 real estate market, the ROI, if we talk about the long-term ROI, starts from around something 5% and finishing around up to 10% if it comes to the very high quality projects and in correct locations. I'll leave the ROI calculation on the description under this video. Usually I give you the briefly understanding and formula how to make the calculation of ROI for you to get the idea how profitable or not is your project. If you understand that you need something deeper, just let me know. I will help you to make the calculation together. But as I said before, the basic information for you to understand and make the calculation is more than enough. In case if you're a beginner in the real estate market in Dubai in 2025, and obviously you have the broker who from time to time send you the different projects by explaining that this project will boom in the market with a very high ROI, just simply ask him the financial logic, how he made the calculation of this ROI, what indicators he used in that case, and how he understood that ROI is high. As I said before, ROI is very frequently used by investors when it comes to secondary market property. Let's try to understand what usually investors use, how they make the calculation of the future future profit when it comes to off-plan, primary construction from developers. And in this case, we talk about ROE, returns of the equity. Let's try to make the breakdown to understand first of all, what's the definition of ROE and what is the main difference between ROI and ROE. Because in this case, I can tell you that probably 7 out of 10 my own investors, whenever I ask the question, do you understand what does ROE mean? All of them say, yes, of course, Gary, we do. But after, when we keep talking about the future project, I understand that they don't. So let's make the breakdown between these two indicators. ROE is the returns of the equity. It means how much money you make in comparison with the money that you invested in the project. If we talk about, let's say, the off-plan project, so the unit is the stock directly from the developer, and the project is under the construction. Let's say the same price of the unit is 500,000 American, but at the same time we have the payment plan from the developer, let's say 60% during construction, 40% of the final installment on the handover on the completion when you get a key. So let's say down payment is 20%, 500,000 total price, 20% out of a 500k is 100,000, which means that your down payment is 100k. Then let's say you make another 10%, which is 50,000 American. So totally you have 100k plus 50k, which is 150. Plus you have 4% DLD, which is in this case 20,000. So totally we have around 107,000 American money that you already invested in the project. After this, exit strategy is to make the flipping after paying 30%, 34 with the DLD. In this case, whenever we sell the unit with, let's say, hypothetically speaking, 550k, so we need to use the next formula. 170,000 American that you use in the project, you divide by 550,000, the market price that you are going to sell the project, and you multiply by 100%. And the numbers that you will get is exactly the indicator of returns of the equity in this project. Going back to ROI, I can tell you that the main factor that really has the impact on that indicator is the total price of the project. When we talk about ROE here, the most important and eventually the essential thing is the payment plan, because more flexible payment plan is higher, hypothetically speaking, ROE you will get. And here, let me give you the real example with one of the real project in Dubai without giving any naming. So we have the project, let's say, that has 55% payment during the construction till handover, and another 45% will pay within another 45 months. So here, let's make the very simple calculation. We have a client that invested 600,000 in one-bedroom apartment in Dubai and paid 55% plus DLD by the moment of completion. And after this, he rent it out. So the future tenant will decrease the total price of the property. Why? By paying out the rents, which means that the flexible payment plan in this case helps the investor to pay out in the end not 100% of the property, but let's say 70 or 75, depends on the amount of the tenant's rent. And in this case, ROE indicator is as high as possible, because at the same time, if you compare the previous investor who paid all the amount and then he rents out, obviously his indicator of the profit is much less, way less than the second investor who paid just the half. Now imagine if we talk about such kind of financial tool in the market as mortgage. So if we have the off-plan project, we have the right to take the mortgage on the final installment. If we go back to the same payment plan as 60-40, so 40% which is on the key, we can take and apply for the mortgage, which means that our future tenant will help us to pay out the mortgage and at the same time to make our ROE, returns of the equity, as high as possible. Obviously the numbers will vary and will be very different, depends on your case, on the price of your project, your rents numbers and whatsoever. That is why, as I mentioned before, use the calculator I will leave in the description, but in case if you understand that you are kind of confused or the numbers are difficult for you, or you have any other questions you would like to ask, without any hesitation, just let Gary know. The main reason of this video is not to convince you, my dear future or existing investor, to jump into the real estate market in Dubai. The real reason of this video is for you to understand where to search the profitable project, because if you remember, I told you that the main important thing in investment in real estate is not emotions, this is numbers. And exactly these numbers are something which will make the weather in the future whenever your property will be around to be handed over, if we talk about the off-plan, or if we talk about the secondary, when you will start getting your first rental income and you will start making your calculation. By the way, when I have the welcome meeting with each of my investor, almost everybody tells me that, Gary, we are interested only about the numbers, we're planning to flip or we are planning to rent it out. But when it comes to reality, I really faced for many times, and believe just my word, many times, like maybe 7 or 8 out of 10, that usually clients, moreover international clients who are not Dubai residents, usually clients buy property based on the emotions. And here the main role is on the shoulder of your broker. And hopefully you have the reliable broker, because this is something must from his side to make the calculation for you, even if you didn't ask about this. Because I'm reminding my idea that I told you a few minutes ago, in case if you will skip this topic while considering investment to the new project nowadays, tomorrow or day after, whenever it comes to snagging, handover, or just renting out, you will understand that you made a mistake, or you could have a higher chance and better option to invest in somewhere else where the numbers are higher. By the way, I do have several videos in my YouTube channel which are very useful for the investor starting from A till Z, regardless you have or have not experience in the market. That's why just check it out. Hopefully it will give you the big usage. Subscribe to my channels and see you again.